Hello, everyone. Welcome to Cherry Bekaert's Government and Public Sector podcast. My name is Danny Martinez. I'm a partner with the CFO Advisory Group within Cherry Bekaert, and I focus specifically on government, higher ed, and not-for-profit clients. With me today is a frequent co-host, co-presenter, if you ever like to call him on this podcast, Scott Anderson. Scott, would you like to introduce yourself to the audience?
Sure. Scott Anderson. I've been with Cherry Bekaert for 20 years. Currently, I am a director on a bunch of audit engagements in North Carolina and Virginia, and I also lead our technical efforts in our government audit practice.
Thank you. So last month, Scott and I presented a GASB update on our annual conference, and what we thought that we'd do for you all, for the people that like to consume your material in audio form, is to talk through a GASB update and to give you an update specifically on pronouncements 102 through 104, as well as the implementation guide update and the projects that GASB has going on. And so we're going to break this up into a two-part podcast. This is the first segment, and we will be covering GASB 102 and 103. The second podcast that should be located right where you found this one will cover 104 implementation guide update and the projects that GASB is working on. So I'll go ahead and tee us off. So with 102, this is effective for fiscal years in 2025. So when 102, again, is certain risk disclosures. So for your June 30, September 30, and December 31 year ends for 2025, this is the year that GASB 102 certain risk disclosures is effective. GASB 103, which we'll also be covering, financial reporting model improvements, is effective for next fiscal year. So for the June 30, September 30, and December 31s of 2026. And so we'll go ahead and get started with GASB 102 certain risk disclosures. And Scott, I think you're the perfect person to tee us up on this because you were actually at GASB as this was being worked on. So where would you like to start?
Sure. Yeah, I was at GASB when this project was going on. This project lasted longer than it was supposed to. It was supposed to be within a couple of years. Because it went longer, I actually picked it up and became the project manager for the project, taking it from board decisions to the exposure draft, and which is the perfect time period, by the way, to be in charge of a project because it means I didn't have anything to do with any of the decisions. But I ended up learning quite a bit about what the board was trying to do with the standard. One of the reasons why the standard took so long was because at the same time, they were implementing Concept Statement 7. And so this project was a trial run, as it were, of the concepts in Concept Statement 7. Concept Statement 7 directs the board on when to require specific disclosures. And GASB 102 is all about a disclosure. And so what they wanted to do is really establish the requirements for when a disclosure should be required and apply it with 102. So there was a period of time where they decided that they didn't have enough information from users on what users thought would be essential information. And so they went out and they did further outreach, and it really caused the project to take longer than they anticipated. But at the end of the day, they spent more time coming up with when a disclosure should be required rather than what the disclosure should contain. So I do have a few clients who have reached out to me and have asked me for help drafting their GASB 102 disclosure. And for me, that question means that they don't quite understand what 102 is trying to do.
And so when that happens and they're coming to you and they're saying, oh, a new GASB has come out, I need to put a new paragraph into my financial statement. Scott, help me draft this thing. What are they missing the boat on in terms of like what triggers are there that would then cause them to disclose something versus to just have new guidance that maybe they don't have a specific instance for in this fiscal year?
Well, yeah. So you're right. When they ask that question, my first question back is, how do you know you have the disclosure? What have you done to get to that point? The goal is to disclose essential information. And essential information, according to concept statement 1, is any information that would have a material or substantial impact on a user's analysis and decision making. And so it goes much further beyond this nice to know, nice to understand. It's essential. So a user will take that information, integrate it into their assessments, and make decisions based off of that information. And so a lot of this disclosure criteria is all about whether or not it's essential. If it's just a boilerplate disclosure, if it's just something they're going to put together in the year of implementation and they're going to carry it forward for the rest of time, that is not what the board was looking for. They were looking for something that when you disclose it, it's shining a bright light on a specific risk that is going to have an imminent impact on a government's ability to provide services or to meet obligations as it comes due. So it focuses though on just constraints and concentrations. So there's some guidance on that. It's limiting that so you don't have to go back and assess every single risk that an organization is facing. You can just focus on concentrations or constraints, but it has to be paired with some sort of event that's making that concentration or constraint relevant to their ability to provide services or meet obligations.
And so, to our listeners, as you're thinking about what is a concentration, it's a lack of diversity related to an aspect of a significant inflow or outflow. Areas that may trigger that is issues with the employers, industries, inflows of resources, the workforce covered by some type of collective bargaining agreement, providers of financial resources, or suppliers of material, labor, or services. And then when we turn to the constraint aspect, this is looking at a limitation that's imposed by an external party or by formal action of a government's highest level of decision-making authority. So some of the constraints you could be looking at there are limitations on raising revenue, limitations on spending, limitations on the incurrence of debt, and then any type of mandated spending. So,
Danny, no one has asked me this question, but I keep waiting for it, which is when you talk about a constraint imposed by the highest level of decision-making authority of the government, why would that type of constraint cause a government not to be able to provide services or meet its obligations? It seems a little bit nonsensical that a government would do that to themselves, right? That's self-imposed constraint that they're imposing, and it's going to cause them to not be able to provide services. And to answer the unasked question, that was put in there because a lot of times at the state level, you've got a General Assembly who might impose a constraint on the state, and the finance department or those administering certain programs have no ability to overturn that constraint. And so that's why it goes beyond a little bit what a third party would require. It might also be a constraint placed by the highest level of authority.
The last thing I want to touch on here is, we talked about that triggering event. So we're looking at, in order for there to be a disclosure, a triggering event that could cause a substantial impact has actually occurred, has begun to occur, or is more likely than not to begin to occur within 12 months of the date the financial statements are issued. And so in terms of the hunting, hopefully there's not too much hunting and searching around with this, because if it's something at this level of impact, it should just generally be known by those within the government. And Scott, you put together a checklist for GASB 102 for the audit team. Can you kind of share what that checklist is and how governments could, use something like this themselves just to double check that they don't have anything that needs to be disclosed?
Yeah. So as I mentioned, we don't expect a lot of governments to have this disclosure. But just because they don't have this disclosure doesn't mean there isn't something that needs to be done as a result of this new standard. For us on the audit side, it's important to understand what constraints or concentrations are known. By the way, that's how 102 words it. Constraints or concentrations that is known by the government, meaning you don't have to go through an exhaustive search to identify these constraints or concentrations. A well-managed government is already going to know what these things are. And so from an audit team perspective, we want to have all that documented. We want to document what the things are that you are already aware of that may cause you to lose sleep at night, that you have to manage around. And then we're just going to document them. And that way, when an event does happen or is likely to happen, we know if that's going to trigger some sort of disclosure based off of our understanding of the constraints and concentrations that are already there.
Great. Yeah, we on the advisory side with our clients, we didn't do too much work with 102. We did have a few of our GASB-as-a-service clients ask us if we had a certain type of checklist, so we kind of tailored the one that you had created. But there was not too much in terms of advisory work that we did there. The next standard that we're going to talk about, though, is one that we are building quite a bit of things for to help with implementation in fiscal year 26. And I'm talking about GASB 103, Financial Reporting Model Improvements. Speaking of a standard that kind of took a long time to develop and to refine, GASB 103 would be one of those. Everyone that kind of stays in touch with this knew that the biggest component of this was a changing in the presentation of the governmental funds. That was pulled out of the final guidance, right? GASB listened to its constituents and realized that what was being developed maybe wasn't worth the cost benefit to implement it for the result that it was going to have. So some of the biggest hurdles with implementation did get pulled off of this, but this is still a pronouncement that will at least take a moderate level of effort to implement with what's left there. It's only 19 paragraphs, but it hits 5 major topics within those 19 paragraphs. And this is seeking to enhance the effectiveness of the financial reporting model in 5 areas: management's discussion and analysis, unusual or infrequent items, presentation of proprietary fund statements, the major component unit information, and the budgetary comparison information. Scott, which of those would you like to hit first?
I love them all equally.
I start with MD&A then.
Okay. If you read through the requirements for the MD&A in GASB 103 and compared it with GASB 34, paragraph 11, they seem very, very similar. A lot of what 34 was trying to do, 103 is trying to reinforce. Sometimes MD&As become a bit boilerplate. Sometimes there's not a lot of actual analysis, and it's more identifying variances rather than analyzing those variances. And so this is, first of all, an attempt to try to improve that. I have heard some of my clients, when speaking to their board, saying if you've only got 5 or 10 minutes to read this long report, start with the MD&A because it'll give you a lot of information. But I don't think a lot of preparers view the MD&A that way. It's more of a check the box at the very end, and there's not a lot of thought. So I think a lot of this was just an emphasis making it better. But there are some actual changes made to it, some things pulled out to make it more specific to the basic financial statements. Budgetary analysis is going to be pulled out, put in RSI. If you follow the modified approach for infrastructure assets, the GASB 34 requirement was you talk about it in the MD&A, but that's an RSI schedule. So now that's going to be pulled out and put in the RSI schedule or notes to the RSI if that is relevant, and that kind of thing. So, but mostly this is just a focus on let's make the MD&A more useful to readers.
Right, and when talking to our clients about this, they're kind of using this as we have been boilerplating it. for a few years. Let's use GASB 103 as the triggering event or reason to maybe refresh and update this information. One of the things that we're building as a resource for our clients, it's not finalized yet, it should be in the next couple of months, but it's an MD&A self-assessment or a scorecard where we're going to look at the different criteria within 103. For example, how boilerplate is it? How specific is it to the government? What do the charts look like? How detailed is this analysis? Are we really describing when something goes up for the actual reason that it went up, or are we just giving some generalized answer? And to have a scorecard of how they are doing from probably a 1 to 5 scale, and the hope is through GASB 103 we'll do what GASB is hoping and moving our clients to a more mature, more specialized MD&A through this process. The next area, Scott, just an easy one for you, unusual or infrequent items.
Yeah, not a lot changing here. GASB 62 defines what unusual and infrequent items are. But 62 requires you to kind of categorize them into extraordinary items and special items. And the issue that is there's some misunderstanding with when one is one is the other, has to do with whether or not the event or the item is in control of the government. What the GASB decided with 103 is maybe that part's not important for presentation purposes. 103 requires you to list or present each individual unusual or infrequent item. Same spot that you would normally do the extraordinary or special item, down at the bottom, last thing before your change in that position. And then the note disclosure would then describe whether or not it is within the control of the government. So not a lot changing, but just requiring a little bit more disaggregation from the statements.
One area where a lot is changing, at least in terms of presentation, is the third one, presentation of the proprietary fund statements. In thinking about the effort and the rework and the re-education for governments, the subset of governments that have proprietary funds are the ones that we're seeing that's going to have the largest impact. So whether it be airports, higher education institutions, that's really where we're focusing on utilities. We're really focusing our efforts on to make sure that we are putting the education out there the next few months in terms of what is changing to the presentation with the proprietary funds. Scott, do you want to go into a little bit the changes that are happening within the proprietary fund statements?
Yeah, sure. One of the things that 103 is like kind of the theme of it is it's taking away some of the options that 34 was providing. And so in GASB 34, governments were allowed to come up with their own policy regarding what operating and non-operating was. And then just kind of in a loose sense, they're supposed to make that consistent with what the cash flow statement would define as operating and non-operating. But we saw a lot of varying interpretations, a lot of different policies, a lot of governments presenting operating and non-operating differently. And so 103 takes all of that away and actually provides a definition of non-operating. Originally, they were going to provide a definition for non-operating and then a definition for operating. But then when you do that, you might find something that's going to fall in between those two definitions. And so they went with the strategy of defining non-operating and then defining operating as anything that's not non-operating. But here's the way I tend to look at it. The whole point of these proprietary fund statements is to demonstrate that function or that activity's ability to recover its own costs. So in fact, the only time proprietary fund statements are required is when there's some sort of cost recovery requirement, either externally imposed or with some sort of pricing policy. And so that's really what the purpose of those statements are, is to show that they're being recovered through rates and charges. And so in light of that, it makes sense that your operating revenue is going to be those rates and charges. The way they've defined non-operating revenue is essentially anything that's non-exchange. Subsidies is a new definition, is a new category within non-operating. Subsidies is basically non-exchange, but also adds a nuance to it. It's not just non-exchange, it's a non-exchange that is going to affect those rates and charges that you have up in operating. And so that's kind of the big difference. It's going to make the statements look a little bit different from what we've seen in the past.
And when we do our webinar specifically on 103, and I don't know if we'll get to it this fall or the January-ish timeframe, we'll spend a lot of time on this definition of a subsidy, some examples, how to think through it, because I think this is kind of what's tripping a lot of people up, or they're having a lot of thought experiments right now in terms of how is this going to be presented. I know there's a lot of organizations that are starting to put out their own thought leadership in terms of where they believe the line is with subsidies. So we'll dig into that a little bit more as we continue to develop resources for 103. We have two more that I want to make sure we get to quickly. The first one is on major component units. Can you just share the change in optionality with the presentation for major component units?
Sure. And I'm actually doing a presentation with the AICPA next month where we're going to talk a lot about component units, and we'll talk about this a little bit there as well. But essentially, 34 gives you three options for major component units, which is a major component unit can be presented either in separate columns on the government-wide statements. They can be presented in combining statements after the fund statements within the basic financial statements, or they can be presented as condensed financial statements within the notes of the financial statements. 103 removes those options. 103, in order to be more consistent across industries, or sub-industries and across governments, will require that all major component units be presented separately on the statement of net position and activities. Unless there's one unless. If it makes your statements unreadable, then you can go ahead and present the combining statements in the back of the fund statements. What does unreadable mean? I think about, we helped a state draft their act for last year. They had about 16 major component units. You're not going to have 16 different columns just of component units. That would make it unreadable. So that you would, in that case, combine it into the one column, but then show the combining schedules in the back.
Great. And then can you hit on budgetary comparisons?
Yeah, budgetary comparisons also is a case where the option is going to go away. 34 encourages the budgetary comparison to be an RSI, but allows you to put it in the basic financial statements if there's not a budgetary difference. 103 takes that option away. Budgetary comparisons should be in RSI now.
Perfect, thank you. And for those of you all that are GASB 87, 96, 101 clients with Cherry Bekaert's advisory team that I lead, just know that we are working through building that same four-phase approach for implementation of GASB 103. But just as we close, I'd like to share some implementation advice. Governments with proprietary funds, please make sure that you're starting early. Keep in mind budgetary presentation considerations, educating your boards or those charged with governance in terms of how the presentation might affect certain key numbers that you all look at those monthly meetings. Use this as a opportunity to take a holistic approach at updating your financial statements, right? You're going to be spending time updating the MD&A. Is this maybe a good time to look at all of your notes and to consider, a cleanup project there as well. This concludes the first part of our two-part GASB update that we're providing to you all. Should you have any questions, please reach out to either Scott or I. My email address is danny.martinez@cbh.com. And Scott has been here longer than me, so his email address is sanderson@cbh.com. Be on the lookout for part 2. Thank you very much.